Right, guys, in today's video, what we're going to do is I'm going to open the viewers up to my process of research. I want to go and deep dive a little bit more into shorting house builders. I'm going to share my screen. So what I found is it's always good to find, the best source of information you can. And I found this, which is housebuilder.co.uk. It looks like it's the industry journal for house builders themselves. And you've got a lot of things to do with government. You've got some forecasts here, and you've got all sorts. So first, I'm really interested in some of these things. So we've got Taylor Wimpey, one of the largest house builders in the UK, who I actually backed in 2010 when I went long and bought the shares. They're forecasting a decline. So I'm going to immediately open that. Okay, so we've got Taylor Wimpey, really big house builder, going from close to 14,000 to 9,000, a drop of 5,000, so over 50%. Persimmon, legal completions could drop to 8,000 to 9,000 after completed 14,800. So again, another looks like about 50% drop. The business acknowledged reservation rate was still significantly lower than recent years. So it looks like there was a downturn happening already, as predicted. It has adjusted for the toughening environment in its build programs. I'd be interested to see what Persimmon and Taylor Wimpey are doing to adjust. They're going to close their Oxford. Taylor Wimpey are closing the Oxfordshire business. It's transferred land outlets to neighbouring branches. It's carrying out redundancies. This is what my sister was saying as well. She works with some of these house builders. Its completion rate has dropped as well, looks like. And they're going to wait completions to the second half of the year. I doubt that's going to happen, folks. There's going to be less people buying in the second half. But anyway, that's what their investor relations department is probably saying, or their PR department. Their order book stood at 2 million. Equivalent last year was 2.8 billion. Sorry, 2.1 billion. And it was last year, it was 2.8 billion, which is significantly lower. Wow. Remember, people can pull out of order books for new houses because they only have to put a very small deposit, in some cases as low as £1,000 to secure a house. They don't put huge deposits down. During 2022, the firm's revenue increased 3% to 4 billion, but won't happen anymore. Pre-tax profit climbed 21% to 800 million. The operating profit rising above that to 900. So they're about 20% margin. It looks like operating profit margin improved from 2021's 19% to 20% for 2022. However, what happens if prices fall 20%? Let's continue. Completions fell slightly. Blah, 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 blah. They're reporting costs for fire safety. This is something else we're going to see. So the CEO is basically saying that they delivered strong profit, yada, yada, yada. They're saying they're still seeing some good signs. But I would take this with a pinch of salt because we are at the start of something, I believe. Now I'm going to click on the March edition to housebuilder.co.uk, and this video is going to be part of a series where I do some investigative investment analysis, if you like. And oh god, that's a weird sound. It's shitted me up then. But anyway, I'm going to be looking at these different sources and doing in-depth analyses the best I can. We won't look at every page, but we'll look at things that jump out. So Basically, they're talking about the challenges, huge challenges in the housing market here. Leveling Up Committee is talking about a strategy. And this is interesting if one is thinking about shorting. If they do come up with a strategy, then house prices could rebound and sales could rebound, and it wouldn't be a good idea to short house builders. Here they're talking about the house builders share price index. I don't know if you can actually short the index there, or if you can look at one particular company. Nevertheless, we're early in this journey, so let's continue. We need the return of red box surprises. March is budget month, and we await Chancellor's Jeremy Hunt's opening of the red box with interest. Blah, 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 blah. The people are hoping for some surprises. They're looking for a reform of planning. Another notable landmark will be the end of the Help to Buy scheme, which apparently helped 300,000 households buy a home. That was a big demand lever in the economy. So in 2010, there were loads of interventions. In 2011, there was even more. There were loads of things happening. This is just talking about, the past, where there was loads of help. Now it's talking about the Bank of Mum and Dad lending 7.4 billion a year to support property buying. And this writer saying it flies in the face of social mobility and leveling up of wealth. And I couldn't agree more. Right, I'm not going to read all of this. It's not saying anything in particular. London tall buildings must have second staircase, so any provider will have to lose quite a lot of space there. That could be, you never know, that could be like a 10% loss of income right there. If you have to include a second staircase, you lose rooms, you add to costs. So there could be some. I'm not a quantity surveyor, but I think that could be a real hassle, especially if the companies have to retrofit and go back. It's for large buildings of 30 meters, not small rises, high rises. So this is interesting. There's a lot more safety things going in. There's house builders have until March 13th to sign an underlying government pledge or face significant consequences from the government. The Department for Leveling Up Housing and Communities published its to develop a remediation contract, giving 49 house builders agreeing to the pledge, launched in April 22, 6 weeks to legally commit to its terms. If they fail to sign, they risk being blocked from developing. Bloody hell, this is enormous news. My God. And it is under legislation being brought forward by the Building Safety Act, being banned from commencing schemes which have planning permission. So this would ban them from building on plots with planning permission and from receiving building control approval for any construction that is underway. Basically, they'll go out of business. They have to sign this new policy. The Home Builders Federation pointed to the Sunday Times interview with Levelling Up Secretary Michael Gove, in which the MP belatedly acknowledged that the government's regulations and guidance have been partly responsible for the building safety issues. I'm not going to go into that, blah, blah, blah. Okay. Under the pledge, house builders have agreed to take responsibility for fixing fire safety defects on buildings of more than 11 meters high over the past 30 years. That, if house builders are selling between kind of 5,000 and 15,000 houses a year, I don't know, maybe 10% of that is apartments. You're talking 5,000 to 15,000 flats they may have to fix each. That's a guesstimate, but this is enormous. Also, the contract will also see house builders legally commit to reimbursing taxpayers for funding spend on remediating their buildings. Meaning, if you live in a block of flats that was built by a big house builder, you can pay for the works and bill the house builder. This is enormous. Absolutely enormous. And this could be really damaging for house builders. But if you're looking to short the house builders, it could be quite good. People complaining about policies hampering new builds. Nutrients in the soil. So this is like a soil thing where about pollution and nutrients for planning permission that's going to make it harder and more expensive to build, probably. There's another housing minister that's been appointed. But I think it's important not to have confirmation bias. And, you know, they may pull out something out of the hat. I'm going to stop this video now at this point. I feel I've done I will stop the reading of those things, because so many things have been thrown up just by that, you know, just by that bit of research. And this is the kind of research I always do offline, and I don't normally share it with people, but I thought it might be really interesting to share the process with you guys. So what have we found out? We found out that Persimmon and Taylor Wimpey and presumably other house builders, the sales are going to go down by somewhere between 40 and 50% this year. We found out that they're going to be liable for, house builders are going to be liable for nutrient deficiencies in soil and things around planning. They're going to be liable going forward for better safety in terms of staircases on apartment buildings, and they're going to be liable for past works for the last 30 years of remedial work, you know, fixing any of these problems to do with safety, going back 30 years. Now, at the moment, it looks like it's just for flats, but imagine that happens for houses as well. I mean, this could be really bad for house builders. This could cost them billions just at a time when their revenues are falling. And if house prices fall as well, the margins, Taylor Wimpey has 20%, Barratt Developments shoots for 25%. They could be losing money on each build, which means they can't be buying properties, they can't be buying land, and they have to be using the oldest land they bought like 3 or 4 years ago in their land bank, which means that's going to hamper their supply because they wouldn't be able to buy unless, you know, obviously if land falls, the price of land falls, and they might be able to. But anyway, it's going to cause the buying teams within each of these house builders a lot of pressure if houses fall. All of their current stock, you know, they may have to reduce pricing or they may have to kind of rename it. I remember when I invested way back in 2010 in the house builders in 2011, I think they rebranded a lot of this land as bad land or old land. That's what they do on the books when they have to basically lower the value of the land, and that can happen. So at the moment, I've uncovered quite a few things that are confirming my hypothesis, but it's very important not to be clouded by this, because you know, when you're shorting, you have to be very careful of things that can come out of the works. For example, when I shorted global indices in 2020, I did not foresee $10 trillion being pumped into the global economy within weeks. And obviously that caused an uptick and a bull run in global shares. But the equivalent in the house market might be potentially additional support mechanisms for house builders. At the moment, it looks like the tide is against house builders with regulation, with the environment, with fixing previous flaws. So maybe the lower quality house builders might suffer more than the higher quality ones. So that could be something to look at. But anyway, this is my research. This is how I go about it. I hope you found it useful. I'm looking to uncover things that people wouldn't normally find. Looking at these niche articles, niche supplements, journals, and niche sources of high quality information that one can make inferences from, one can make forecasts off the back of, and one can make quality, logical financial decisions off the back of. I hope you've enjoyed this. If you have, like and subscribe. Share it with a friend that needs a bit more financial logic in their lives, or someone that just wants to follow my journey. For better or worse, I do follow my analyses with investment. So you can call me an applied investment analyst if you like. I'm not qualified. I just do this for fun, but I hope you enjoy it and find some value from it. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. I'll see you guys in the next upcoming video, which will be showed probably on your left or right of your screen. Take care, and I'll see you guys soon.